Any questions? I know I went through everything kind of quick. Any questions on the core signals? Anything that you want to see specifically? Yes, no, maybe so. Otherwise, I'll start moving on to the auto charting tools and then into the other ones that'll go a little quicker, like liquidations, harmony, and the oscillator. So looking at auto charting tools, I'll just reset this to whatever it is. Right off the bat, default, it's showing the important opens, right? The opens are really key in this thing, and it also has the wicks, the swings shown on open. And the reason these wicks will show specific structure that you need to keep an eye on. And on lower time frames, like you can adjust it between wick and body. Currently, it's set on wick, which means that we want to see if it creates new lows from this low. And it's basically just a reminder in a sense. It's like, hey, if we create a new low from this low, we're breaking structure to the downside. Where do we want to hold? Somewhere, where there's some other wicks back here, but realistically, we don't want to break the low of the next one. So there are ways to do this. If you set it on body as an example, you can then start, how I use swings and how we use swings when we chart. That basically pulls the structural level up, which may be more effective to some people. So it basically will then show you swing highs and swing lows, structure that we don't want to break. Once we start breaking structure, that's basically the level to retest if we regain current stuff. Same thing to the downside now. We're creating new swings down here. Where do we want to go if we break down? That'll be the first stop, most likely, if we do get the full test of everything. So, and the more you see these things stacking up, like if there's 3 or 4 swings in a row, that's usually the most important level. And again, use this as confluence with other parts of the indicator. Let's turn that off for a second. And we'll look at order blocks, because this is probably the one that I use the most. SNR, this basically shows the support and resistance at the chart you're looking at on different time frames. So the lower the time frame, the less relevant that level is. The higher the time frame, the more important, the more relevant. So even here, as we're down, this is higher lowing off a 3-day. That's pretty interesting for price structure, right? If we sweep the 3-day, where do we want to hold? At the weekly. If we lose the weekly support, this thing probably dumps all the way down to like big boy support that's much lower. So again, the lower time frame stuff, like the current daily, it'll show you really good restrictions on like, hey, we have a really big restriction on Bitcoin right now going back, since Sunday or since Saturday, right, at 19.5. The current support is going back, a 3-day support, and we're at it right now. So this is the potential long until we lose that structure and bearishly test it. Then we look at the weekly, that type of stuff. So I think that's really effective, especially on lower time frames. Another thing to keep an eye on is the sensitivity for these things. You can increase the sensitivity, which will basically just how do I say this? So increasing the sensitivity. It's a little counterintuitive, but if the higher that value is, the less restrictions it has for firing SRs. You'll have SRs popping everywhere. The lower the level, it'll pop more. So if you're in a zone and it's not showing a lot of SRs, just adjust the sensitivity to it, and then you should see some levels that start popping up. Volume blocks. This is a really interesting one. It's basically bullish and bearish demand zones, but it requires volume. Now, on the lower time frames, you're probably going to see a lot of stuff just really filled out. It'll just like plot all over the chart, which is fine because the 1 hour, technically is a lower time frame chart. But what you see when you have these things is overlap of level. And when levels overlap, it basically shows you where the main points of resistance are and main points of support, even on the 1 hour. A lower time frame, it gets really really structurally hard to see where everything is. Like we said, what do we have here? We have several layers of overlapping support. This is really the level to hold, right? We start breaking that. We start looking further to the left as far as finding structure. And again, this is on the 1 hour. If we go to the 4 hour, it'll look further back, right? The higher time frames will look further back to find the major volume levels for basically by demand and supply zones. So again, what do we see up here? This entered into a bit of a supply zone, and then by the time we got into this structure, this is the heavier supply zone. Again, this is still currently a little bit bearish zone. Where's the main support on the 4 hour? All the way down here. right? So a lot of this depends on the time frame that you're trading on. So one of the best ways that I think to use this is that once you start locating where there's a lot of overlap on bullish and bearish zones or supply and demand zones, I like to put both on. And then it kind of really reiterates of like where the most important levels in the entire structure are. And overall, you start seeing like where the major resistance is, where the major support is. And then when you have it, in this instance, as an example, you have bullish zones that are caught out by bearish zones, like where, we lost it, right? That's the level to regain realistically as we move back to the upside. That's the main one because we already had it bullishly. And once we lost it, that was why we nuked. Same thing to the downside here, right? We're starting to see the overlap a level. Where do we really want to see a hold? Either right here on a lower time frame, 4 hour, nothing below that. Otherwise, you start breaking down in a lower structure. So again, it's a way for you to be able to find support and resistance structure and then target that. And again, I'll go into this at the end of this, showing some strategies of how we use that along with core signals on lower time frames to spot scalps long and short. So that's one way to use that. Candle identifier, if you're looking for specific candles, it's all these different ones. It'll automatically plot them on whatever time frame you're on. I don't think this is really relevant on anything other than like high time frame, because the daily and weekly especially and stuff like that, then it becomes really interesting, but it automatically plots them, which I think is really cool. Daily time frame opens. This shows 1 year's worth of monthlies, 1 year's worth of quarterly opens, and then the current daily and weekly open, as well as the yearly. So I almost always have these on constantly, no matter what I'm charting. Even on like the normal streams, I'll have these on. Because daily levels, basically the reason these things play out, the simplest way to explain it is that if we're underneath the current price of the daily, weekly, October Q4, and we're bearishly testing it, that's the main level we want to gain locally, right? Because if we retested it, which we just did in the current 4 hour bearishly, it's basically saying, hey, this is the current restriction. So at these time frames, whatever they are, those are the levels that we want to have the continuation. It's basically like why we look for swing fails that regain levels, right? Like if price comes down, it's nuking, and it goes under a main level like this, and then bounces higher lows it, that's your trigger for an entry. Because we're bullishly retesting these levels. When we bearishly retest these levels, like we just did, those are triggers for shorts at whatever time frame you're trading. Realistically, you want to see stuff like squeezing underneath the September open, as an example, was a mean one, right? Where was the floor? The July Q3 was the floor of the previous move. The moment we lost the momentum of the floor of the move, we nuked down to the next level below, which is the current monthly open, which we're still fighting for. So it's pretty self-explanatory. Again, like I have these open on every single chart that I look at, because at the end of the day, that's all I really care about. The main levels in the current structure. Between that and like the SR and volume blocks, those are like my bread and butter for how I trade this stuff. Fib retracements. In the older version of this, there was a lot of different functions like deviation and depth. We've kind of optimized it now where you can change the sensitivity of it to whatever fits your liking. In the current price structure from this low, obviously that's a swing, and that's technically a swing. It's pulling it from the current high to the low. Again, when we were doing this manually, we weren't looking at the local low. We were looking at that current swing move. Currently, we're still at the 618, which is fine for potential, hold and retracement. And this is pretty much the level we want to hold. If you don't know anything about Fibonacci retracements, it's worth a Google to watch. Anytime you have retracements, the main levels to watch is 0.5 and 618. 0.5 is not a Fibonacci level, but it is the halfway point of the previous move. And the 618, which is basically the full retracement of the previous move. So even here, this is the level we really want to hold. If we start losing that and coming down here, it just means that the price action is more bearish. Same thing to the upside. If it retraces and then holds the 236, right, that means it's very bullish. Or it holds the 382, very bullish. More so than coming back to the 0.5 and 618. This is kind of like neutral hold level comparatively. Anything that holds higher means the price action is much more bullish, and then you're potentially getting continuation. If you start breaking down the 786, then you can still start failing more structure, so it gets much more bearish. And anything that does a full up and a full down to the previous move. At that point, the retracement's invalidated anyways because it's now done a 100% retracement back down. And take it as is from there, because then you have to throw the Fibonacci thing out of the window and start looking at structural regain. And this can be changed, obviously, by changing the sensitivity, and you will need to adjust it on different time frames. I find the 4-hour works very well, the daily as well. You just if it's not pulling from where you want, just adjust the sensitivity, and then you can change. There we are. You can adjust the sensitivity, and you can adjust the style. If it's solid lines, dotted, dash, the colors, and all that jazz. Trend lines. This one's actually pretty interesting on like lower time frames that we found. This is automatically going to plot trend lines for you. And then for me, I kind of use this sometimes as a way to see things that I'm not looking at. Trend lines do play out very often as far as taps. And one of the best ways to use trend lines is you look for 3 taps or failures. So as an example, right, we had, that was the confirmation of a trend line. That was the hold for a bounce. That was the failure. And then by the time we lost the trend line, it just nuked down to potentially creating a new one. Depending on how you trade as well, take a gander at looking at the different, whether Wix is working better on the current thing you're looking at or bodies. And all it does is it changes, whether it's pulling the trend lines directly from the bodies or from the Wix. From here, obviously you can see this was just a continuation. That's a retest failure of the previous trend line of the low. So I think it's generally just a pretty interesting one to use. I don't use it very often, but you can combine this with support and resistance. So, you need 2 points to create a trend line and then 3 taps that don't break through. Usually good for a little bit of a scalp. Same time, same thing up here. This is great lines for shorting the whole way down. So they tend to play out quite often. And this is just kind of like a way to spot things that you may have otherwise missed. See, price projection. This one's still one of the experimental ones. It's getting one of the newer versions we're working on. It's getting pretty crazy. It takes a certain number of bars, and it basically shows you whether the current price is moving up or down. In a sense, the big focus on this is that you want to see which direction price is trending. If it's ranging sideways, or if it's like major moves up and down. For me, I think the lower time frames aren't as forgiving regarding that stuff. I think we've had pretty good levels on it for like the 1 hour and 4 hour and higher, just because we're seeing more of like major trend rejections and gains. So anytime this thing starts getting into like the higher red area, right, this is starting to get very, very overbought. We're then looking for potential failure. Same thing is that once it resets and we want to see it create some more trend, failures, once we start getting into the middle of it, starts failing center of the trend line, failure September. Again, the more levels that you can put on here to say, this is the level to fail, because this is the level we want to gain to keep the high. It's losing the center line of the trend. All these different factors that you can kind of like put together to say as a confluence tool. So it generally speaking as well, it's good for finding if price is currently ranging or trending. So if we're in a massive uptrend, obviously you want to see it hold that trend, and once it breaks it, right, that's the projection that it loses it back to the downside. But it resets every 100 bars or something like that. I'm not exactly, I got to double check exactly what it is, but it's a pretty interesting tool. I don't use it that often, but it's definitely interesting to show some data if you don't know the current trend or if it's ranging on the current thing you're trading. Time frame ranges. This is a really cool one. It's very effective if you're trading ranges. Ranges are basically like dailies, daily highs, weekly highs, that type of stuff. A lot of times, and we have some friends who only trade range sessions. So the purple are the intradays, and anytime you have like multiple purple stacked, you start seeing that this is like the important level to hold. The yellow ones are the weekly. These are really, really powerful on crypto and Bitcoin in general. So anytime you start seeing, coming to the top of the range, failing the top of the range, that type of stuff, it starts becoming very, very important to the current price structure. And then even here, when we start breaking down, that's probably the level to hold. We've looked at the other indicators as well. There's some other session stuff in here that's really important as well. Let's see. And then of course, like, when there's overlap, the big green ones are the monthly levels that are important. So these are much more higher time frame levels. For me, I really like the weeklies. I mean, if I had to just use one, it'd probably be the weekly sessions, just because of how powerful they are to the current price action. And anytime you get, wicks below and then buys back, breakouts the upside, dumps, failures to gain levels, that type of stuff, it starts just, adding on to the importance of these levels. Finally, and this one's a lot more effective for normal markets, is outside of the Asia session. So these global sessions, what they do is they show what price action does based off of what market is open. And it'll show you, so even here locally, right? Orange being the Asia session, blue being or purple being the London session, and blue, and where there's a 4-hour overlap between the New York session and the London session, and that turns kind of like a middle color, right? We see that. So this is generally speaking the highest volatility one. The thing that I find to be most effective is see when there's overlap on levels, and then see them holding or breaking out of or retesting these ranges. One of the things that is very interesting, especially with like the the Asia session. The Asia session is pretty interesting, generally just the orange one, because usually when we retest the floor of the move or retest the high and we break out, we usually send pretty hard or fail. That's usually because Asia leads the way. Asia's open first compared to the rest of the markets. So they kind of dictate what's going on. And then the rest of the day, if we have stuff like, hey, we came back up, we bearishly tested the October Q4, and then we've also tested the low of the Asia session range, and now we're currently underneath, all these different things like the previous day ranges and stuff like that from like last week where everything closed. So it just shows you the general trend, and then a lot of people can there's ways to build systems off of session trading, which is becoming more and more common from what I can see. But yeah, I think that's a good summary of the auto charting tools. Do you have any questions about the tools or how to use them? Anything specific?